Hello guys, welcome to the next edition of Bachelor Trades. This is the week of August 22nd. We have a tremendous trade that went on, really a series of trades. I generally like to focus on one individual trade in a specific name, asset, class, and security. However, we have a global risk trade that was triggered by the Bank of Japan last week. And first I want to do a little background first on the Aussie yen. This currency pair is really a thermometer in finance for global risk and risk aversion. Despite what anyone wants to say about Japan's outsized debt to GDP ratio and some of the domestic issues and the lost decade, there is no greater place for risk aversion than in U.S. Treasuries, the U.S. dollar, and the Japanese yen. Therefore, when their currency is in high demand, creates deflationary pressures in their domestic environment, and their exports become more expensive for, obviously, the takers of those exports. Now, it's very important to realize that the reason the Australian dollar is such a great gauge for risk is because the Australian dollar is so wedded to the price of commodities, similar to the Canadian dollar, but the Canadian dollar has kind of a unnatural, not only does it have a little bit less liquidity than the yen, it also has a bias towards North American demand and the U.S. economy. Therefore, it's not, while it is quoted in oil and currency prices and commodity prices often, when it comes to global risk management, your yen is your currency of choice, if you will. So when we look at it relative, the Australian dollar to Japanese yen, we can get an idea of the marginal buyer or seller of risk assets. And as we can see, the trend with the dollar, which is this chart, significantly affects the Japanese economy. We're looking at all-time lows in dollar terms and all-time highs in yen terms. The chart really doesn't even go back that far, but we're talking about 1994 lows, as you can see in this article. The yen 97.70 level would be the all-time high, and this was written, the formal all-time high, this was written back in July. So these things have been kind of brewing in the global policy circles for a while now. And what I saw was rumors that the Bank of Japan was being pressured by the political environment to take action with easing policy. And when we first saw those comments, first of all, I had anticipated the trade quite a bit months back, not really months back, but I first talked about it on the 16th of August, a couple weeks ago, that there was this wedge lining up, and I figured if we got some Bank of Japan action, a little bit of a bounce in the market, and generally some inflows, this bond thing could turn around. It was very early. Luckily, I did not make any significant entries here. I did enter some oil trades that we'll talk about in a minute. And I was looking for a break. This is a pretty bullish chart pattern here, so long as this holds. However, as we know, early in this August, the pattern did not hold up. But a few days ago, I saw the comments out of the Bank of Japan, or rather that there was going to be a press conference by the Prime Minister and the Ministry of Finance had already kind of primed his comments that they were, very concerned about the situation, and that they were going to seek, alternatives to easing, essentially. And for you to understand what's going on in Japan right now, you have to realize that they have undergone more change than even the United States has as far as the political environment over the last 2 years. I mean, we're talking about a liberal Democratic Party that had been in power for over 30 plus years. There's been small mixed parliaments in the past, as you can see, but this change of administration that happened was very significant. This guy, Haruoyama, was basically the Obama, if you will, of Japan. And he won a landslide election. He got 308 seats and was allied with the Social Democratic Party and left the Liberal Democratic Party with only 119 seats. For you to understand how historic this is, this would be like either the Democratic or the Republican Party, depending on your orientation, having been in power for 30 plus years. I guess very similar in some aspects on the congressional side to the 1994 elections with the Republicans. Not quite as such a stranglehold as that. But imagine having the same president, the same House of Representatives for same party in power for roughly over 3 decades. So this is a huge change. But not only did that happen, but several a lot of the policies that he promised the electorate were not implemented. There was controversies, and he was shown to be kind of unfortunately not an effective leader, and he resigned in June. And so Mr. Khan has since become the prime minister, and he has felt a setback in their House of Councilors elections, which happened a couple weeks ago, and his power is even being threatened right now. Japanese politics are very different than U.S. politics, especially of late, and things can change very quickly. So you're seeing the political brass come out and challenge the Bank of Japan and press for their easing policies. So when I saw these reports of that happening, I immediately, I got long the Australian yen, and I was watching the Nikkei. I was trading the Nikkei futures on the Osaka exchange, and once we broke 9K, that was my kind of tip-off for, okay, if this is going to happen, the markets are going to bottom, and you're going to have a risk-on environment. The bond yields are going to go up. Your bond prices are going to come down, and we're setting up at a technical level on the S&P that's going to be, this is all going to kind of line up. Well, fortunately on the 24th I was a little bit early, got long oil and a lot of other risk assets, and had to absorb some pain until there was rumors coming out that there were going to be these press conferences, and that Mr. Khan was going to speak later in the day after the session. So I got long this audjpy overnight, and that provided to be a little bit of a early entry on the 24th. I had to sell most of it right at the open for the profit, and obviously the market faded the next day on the 25th. But I believed that with the Fed lining up at these the first day of the Jackson Hole conference, the Bank of Japan pressured to make an emergency meeting prior. This news just came out Sunday. They are going to do it. There's an emergency meeting later today in front of the normal September 9th to September 12th meeting of the Bank of Japan. So this is developing very quickly. This is what I said on the 27th before the Fed was out. The day before, the night before, overnight. I was expecting the GDP revision to come in at 1.1. I got a lot better than that, 1.7, 1.6. I thought it was going to be a very scary opening down to 1030s on a weak consumer number, which the opening wasn't quite that bad, but we did get to that level. So I got in my first entry in size, as you guys saw, at 1043, and I added just down at the lows at 1038.75. And that was my day position. That proved to be a very nice trade, along with the Australian dollar exposure from the night before. and we really were able to capture a lot of upside on this currency pair, and tonight it is gapped up right above the 77 level, and it should set up for an interesting situation whether they sell the news on this emergency meeting or it continues to break through. That would be very, I've already locked up the crude position, but if any of you are looking to, you maybe missed the movement in commodities, if we get a significant development out of the Bank of Japan, you could be looking at prices on oil. As you, I don't know if you can see this other monitor. I'll grab the Ready Plus DOM over here. You can already see crude is back above $75 today. You could be looking at the $78 level pretty quickly here if we get some developments out of the Bank of Japan. But basically, I just wanted to highlight kind of how my thought process developed over several days, and this currency pair. Watch for these key-offs in key risk currency pairs and design trades, macro trades around them, because you needed to anticipate that level in the 1030s on the S&P in order to make a great trade on Friday. I mean, a lot of the guys in the pit on the floor of the CME had a great day, basically by buying those lows, knowing that, okay, there are these comments out of all these central banks. How are you going to fight the Fed here? We've got the GDP number out, and from here it's basically a pretty rosy scenario, at least for Friday. And it's my impression that it could very much continue into the first half of this week. But watch for, these developments are fast moving, very fast moving. So the intervention is coming, I believe, from the Bank of Japan. But be very cautious to their course of action, because they're highly, analysts highly do not expect them to do large asset purchases, and probably they're just going to extend the term out from 6 months for these 0.1% interest loans that they offer to banks. They're basically they don't, like the Fed, they don't have much room other than some pretty draconian measures outside of just easing, because the rates are already, these loans are already available at 0.1%. They're really just going to play with the term structure of them, I think. There's an outside chance that they could, again, as I said, explore more draconian measures, but that is a kind of a low-risk situation. So you may have a sell the news environment here, but look for this to develop over the emergency meeting, over the September 9th meeting. So it could drag on for a couple weeks where we get this currency push to a lot of risk assets. Look at your copper, look at your crude, look at your commodities, and position yourself as such. So not exactly one individual trade for this week of bachelor trades, but an important lesson, I guess, in Forex and how to design a macro basket swing trade. So I hope that was helpful, and take care.